Hi, I'm Cary Artac with Artac Advisory, and thanks for watching this video, which will update you on the mid to longer term technical structures currently playing out in the 10-year US Treasury Note futures market, a market that is regularly covered in my monthly futures wrap, with the current October 2015 issue depicting a long-term 7-year ascending channel bottom presently at 124.25 that is held repeatedly over the last 18 months. This long-term formation encapsulates the descending trend in longer-term rates since the 2008 financial implosion, one that continues so long as monthly settlements above the 124.25 formation remain a fact. A simple trend line off the 2012 and early 2015 highs, currently at 129.31.5, managed to hold the October highs, thus forming a narrowing wedge between it and the 124.25 channel bottom. Holding below the 129.31.5 trend line, which drops to 129.27 in November and to 129.22.5 in December, allows a retest over the next 3 to 5 months of the 124.25 channel bottom, a formation capable of containing selling through 2016. While not expected between now and the end of the year, a monthly settlement below the 124.25 formation, which rises to 124.30 in November and to 125.03 in December, would signal a continued collapse into the 117 point even to 118.22.5 region over the following 8 to 12 months. An event that, in my opinion, would also run parallel with a series of Fed rate hikes, the 117 even to 118.22.5 region able to absorb selling through the balance of the decade, and a meaningful downside inflection point over the same time horizon. That essentially covers the mid to longer term downside scenarios, yet given the continued state of a longer term bull market above the 124.25 formation, an upside violation over the next 3 to 5 months of the 129.31.5 trend line remains the more probable scenario. In a moment, I'll provide the upside targets following a monthly settlement above the 129.31.5 trend line. But first, I ask that you give me 30 seconds to tell you about my monthly futures wrap, from which this video gets much of its information. Delivered on the first business day of the monthly futures wrap provides critical mid to long-term analysis in 20 high-volume U.S. futures markets, including U.S. stock indices, U.S. treasuries, international currencies, energies, metals, grains, and livestock. Each of the 20 markets contains highly specific price support levels, descriptive charts, and noteworthy commentary, forming a trading product of exceptional value. All this for only $29.99 a month. Fine-tune your market perspective by subscribing today. A moment ago, I mentioned that given the continued state of a longer-term bull market above the 124.25 formation, an upside violation of the 129.31.5 trend line remains the more probable scenario over the next 3 to 5 months. This trend line drops to 129.27 in November and to 129.22.5 in December, with a monthly settlement above indicating upward continuation over the following 2 to 3 months to the 132.09.5 formation, able to contain strength through 2016 and a meaningful upside acceleration point over the same time horizon, meaning a monthly settlement above the 132.09.5 formation, which rises to 132.13.5 in November and to 132.17.5 in December, would indicate not only a retest within 3 to 5 months of the 135.15.5 2012 high, but more than likely 12 to 18 months of bullish continuation into the 140.25 to 141.25 region, a depressed interest rate environment that would likely involve continued economic challenges within China, Europe, and even the United States. Stay tuned for more market analysis videos. They should become a weekly event by early 2016. I'm Cary Artac, and thanks for watching.